Live. Oh, yep.
Are you being an old man right now and clicking buttons?
We're definitely live.
All right, cool. We're live.
Sorry about that, everybody. We were just in the middle of our...
Are you being an old man right now and clicking buttons?
We're definitely live.
Shit, everyone's all out of...
Yep, that was a bit of a dress rehearsal for the...
Are you being an old...
The upcoming all-time high party that we have scheduled, and I didn't realize that the stream had gone live there, so we were busy there bobbing our heads to some music as we've been this whole afternoon preparing. We want to be very prepared for the party we got coming up, and making sure that we're setting the right vibe and coming in with the right spirit. So we've been rehearsing and didn't realize that the stream had gone live there. We kind of lost track of time as that song was going on. So thank you everybody for tuning in. This is the Honest Analysts live stream, Thursday evening as usual, 7 o'clock East, 7:30 Eastern time, and I am here with my favorite co-hosts, Fibbo Swanee and Smokin' Joe Saz. I appreciate you guys showing up tonight, not just for the live stream, but also for the dress rehearsal. I think that's going to make a big difference for the party we got planned.
Cool. I still got that song in my head.
Your trip is short. That is definitely one of my favorites. Quick shout out, Martian Monster. That is a Fish song. For anybody that is familiar with Fish at all, I'm sure you've seen the poster in my background. Fish is definitely one of my favorite, scratch that, my number one favorite bands of all time. So I like to share this time with you all, and also listening to my favorite band as well. And I'm certainly feeling it myself, and I hope that everybody else is as well. This is a big time as far as I'm concerned. How long have we been holding on to the belief that Bitcoin was going to reach these prices again? It's been a very long haul for me, I know that much, and I'm assuming it's been that way for everybody watching, and I know it's been that way for my co-hosts. There's one thing to have a belief that you think something's true, that you think Bitcoin is, gonna eventually approach these prices again, and then once it actually does happen, it's pretty darn special as far as I'm concerned. It's kind of, I don't know, just one of those times where I like to take a step back and kind of smell the roses and just try to remind myself that this is this is a very unique time in history that we are getting to experience. Anybody that's a part of Bitcoin right now is a part of history as far as I'm concerned. And if we're not, then, Bitcoin's going to zero. And I don't think that anybody here believes that. I think that we are all, anybody that's in this right now is not in it to get rich quick. They're really in it because, you're in it because you believe in something more than the price going up. And that's why you didn't, give up. That's what the bull markets and bear markets do. So that's kind of the whole point of the party that we've been planning here on this stream over the last few weeks, months, or whatever the case has been. We've been very
it's been a while.
It has definitely been more than a couple of weeks. We've been very confident that a new all-time high would be coming at some point, and we wanted to try to set something up to celebrate that for everybody that's been around for these last couple of years, because that is, I think, sometimes the euphoria is earned, and I for one am definitely feeling a little bit euphoric right now with the prices back up where they are, while still remembering that we're below a 3-year high after a halving. So I think there's plenty of room to go, but we don't want to forget about what's happening right now, whether it be getting ready to approach the prior all-time high, or whether it be at a top and never going to happen. This is the highest price you'll ever see again. It's a very exciting time. So,
so the details are, once it makes an all-time high, it's a week after. The party will be a week after that point. Is that what it is?
That's exactly right. The only thing that would interfere with that is the holidays. If it's like, basically in the next couple of days and a week before Thanksgiving or something like that, we'll make it that a few days later. The only thing that would interfere with that is the holidays, and the main thing we're wanting to do is kind of capitalize on the euphoria in terms of we're not charging for anything. It's an open invite. Anybody that wants to come, we're gonna figure out a place to go, and we're just gonna go have fun. If it's just 3 of us, then we're gonna have a lot of fun ourselves, and we're gonna set up a camera and at least have a streaming party like we did for the Hyperwave book. So anyways, that's something that we just want to be there with a lot of people who are experiencing the euphoria that is potentially deserved. The true believers that have been here through the bear market deserve a party if Bitcoin does make a new all-time high, and we want to be the ones to throw it. So that is the reason why we were rehearsing, and I'm sure that everybody is ready for us to go ahead and get into some charts. But we'll take a few minutes here off the top to go ahead and chill that party. You know that if I'm going to be there, I'm going to do my best to make sure it's a good time. And I know that if Joe's showing up, I'm just going to try my best to make sure it doesn't get out of hand. So that's why we're bringing Fibbo. He's going to make sure to keep us all in check.
Yeah.
Anybody that is
The last thing I'm going to be is a chaperone.
Well, shoot, so it might be out
Bibbo's going to be a bad example, man.
Well,
all I know is I want to smoke a cigar with Joe for sure.
We're definitely
only the best.
Smoking cigars with Joe. There's no doubt about that. That is one thing that's a requirement. It will be no party without cigars with Joe. That is a fact. And with that being said, I just wanted to take one more moment before diving into some charts to thank you both for being here with me and for doing this show. I think that it's something that I've personally got a lot out of myself, and I'm hoping that others have as well, those that have been watching. Obviously, we hope that you've gotten some out of it, and we've gotten a lot of great feedback, which is what really means a lot. So we really appreciate that, and I just wanted to take a moment to say that I really appreciate you guys, because this is a time that I'll remember for the rest of my life. When Bitcoin makes a new all-time high, when Bitcoin trades above 20,000, you think I'm going to forget that day for the rest of my life? Not a chance. And I'm going to remember the time that we were here together, just sharing the pains and some of the joys that may or may not come along with it. So that being said, thank you both very much for being here and sharing your honest analysis, but also being here on a regular, consistent basis on where fans or viewers can depend on us just being here and giving our analysis regardless of what may or may not be happening. And it's been very fortunate that we've gotten to go live during some really cool periods of volatility, and that is one of the things that we'll always be able to look back on. There's those videos during these when Bitcoin was dumping at 10,000, we're live on air, and you can forever, we'll be able to go back there and see that. And if it wasn't for you guys committing to this with me, I can't say that I would have been there, to do that. So anyways,
even to flip it around, thank you for actually having us, and bringing this together. I think this is a great show. I enjoy it. And I really like working with you two. It was a decision that was, for me to go out live. I'm a behind the scenes kind of guy. I'm not a person that tries to be out in the limelight and all that kind of stuff and trying to get 10 billion followers and all that kind of stuff. I just do what I do, and I just like what I do. But I'm glad you brought us on this show, because I'm getting really good feedback from people, and that's what I'm here for. Main reason is to learn from you guys, and hopefully people are learning from me, and I'm enjoying it. Even if we wouldn't have rallied like we have and everything's going really great, I still think we'd be doing it week in, week out, learning from each other and figuring things out. So I'm loving it.
Well, I really appreciate you saying that. That does mean a lot. And anybody that doesn't appreciate this little love fest here can skip forward a few because I have one thing to respond there, and that is that the reason why I decided to put this show together was because of how impressed I was with what you guys have been doing. It's one thing to talk about doing something, and it's another thing to be doing it in real time, risking your real money, and feeling those real emotions, and then to be doing it with a system that you developed by yourself originally. You put this together yourself, and again, that who knows, maybe in 100 years somebody will come back to this threshold theory and Smoking Joe's order book stuff and be like, still learning from it. You know, that's what's so cool to me, is just you never know how the permanence of this type of stuff. And the reason why I wanted to put this together was because of what I saw to you guys throughout the bear market. That's, to me, that's where you prove your value, is A, surviving the bear market, but also B, maybe making some good calls, and not just surviving, but being able to stay bearish throughout a bear market, and this sort of stuff. What I saw from you guys, and that was a result of the things that you developed originally, is what inspired me greatly, and why I wanted to do this show, because I knew that if 0 people watch, and if in 50 years nobody, or 2 years or 5 months nobody ever knows who we are, I'll know that I learned a lot just by doing this with you guys. So anyways, that is definitely plenty of that. And
All right.
fuck you both. That was another I guess rehearsal for the party, where we will be having plenty of good discussions, good things to talk about, and just remember back on the last few years. So that's what that's all about. And again, it's free. Anybody that wants to join, just follow along, pay attention. As soon as an all-time high is made, we're going to set a location and a date, and we're going to be there, and it's going to be a blast. So that being said, I feel like Smoking Joe Saz is itching to dive into that book and tell us what he's been seeing. I feel like I might have seen something that some sell signals have been popping up. Is that what you're seeing?
Yeah, I've had some fun. Been really playing with a lot of risk, and just bouncing that risk in and out of these ranges that we create. So I'll jump to screen share, explain a little bit about that, and of course cover the signals that we got and the signals that I've taken. And yeah, so you want me to just jump right into it?
Please do. You don't even
Oh
have
yeah,
to the screen
and
share.
I love you too, dog. I love you too, dog.
I was going to wear my sunglasses the whole time, but I can't see any freaking numbers.
Oh, I can't see numbers for shit, but we're doing it live.
Joe is so cool that he could analyze charts with his sunglasses.
Yeah, there you go.
So so here's the signals. We've been getting some great tops. Great stuff here. Did this one have something? Yeah, we got some great signals. I mean, we've been getting, but some great signals going on. So I've been taking just about everyone that I'm awake for. And yeah, just been, paying attention to the bid-ask spread. It's been, kind of flipping at times, getting me a little nervous, making me actually feel, and you guys might not like this, like we're actually in a indecision period, potentially transitioning to a top and out short term. I don't think Bitcoin's going to get damaged from a little bit of downside, and I think this is the transition to it. But we have been getting great signals. You've been able to get out clean using your horizontals. So right now I've been in a trade. I took all of this and I got pretty much my average entry moved to 18,020, down from 1879. But I've been, like I said, flipping in and out of leverage. So that's actually been taking profit, decreasing my average entry if I enter at a lower point. But since I've taken profit, that's increased my portfolio margin, which is effectively pushing my liquidation target back almost the amount that my average, like basically keeping my liquidation price the same while moving my average entry, in this case down, but let's just say up, down, all around. So I've been playing like that, keeping in a position while trading leverage to stay in a position. And the signals have been great. And I think the fact that we're getting consistent signals along a horizontal space, especially after some stuff like this, really choppy market behavior, getting consistent signals at a horizontal, a couple canaries here, pulling back into that same range and giving us strong signals, this starts to get me a little nervous about a pullback, and I'm starting to get a little bit bearish. So I am scalping out, I am entering again, but I am going to keep general exposure short until otherwise noted. If a gold mine flares up and I'm in the money, then I'm getting I'm boning out right there. If I need to put a stop loss, I will too. But chances are I don't think a gold mine is coming. If we look up here at the order book depth, non-cumulative bands, you're seeing, you know, pretty decent, you know, sell dominance, pretty decent sell dominance in 1 to 2.5, and then a really tight spread on, you know, it's you know, pretty tight spreads across the board. To turn this into a fair fight at 18K is interesting, and I do believe it suggests that we've gone up too far too fast, and I think people are going to transition into a seller's mentality short term. So that's pretty much I think my analysis in a nutshell. I'm going to go with questions because I feel I was also live a lot today, and I might have said a lot that I didn't cover. So is there anything that I missed there, Sock, or any questions you have?
No.
One thing you haven't said is choppy at the toppy. I've heard you say that a couple times, but go ahead. I'm sorry.
Choppy at the toppy. Yeah, getting choppy at the toppy, as they say.
I like this. This could be a new saying that I could be on board with for sure. And yeah, I'll get the chance to share my own analysis, and definitely seeing some signs of a chop for sure. And one thing that you said that interested me most is this being an indecision period, which I very much agree with, and that's kind of one of the main linchpins of my analysis personally. So it's interesting to see that. I just want to recap personally myself. Over the last few weeks, you haven't seen really any resistance in the order book as we've been running up. It's just been nothing burgers all around, and now you're actually seeing that start to flip.
If anything, I've seen sellers rolling out the red carpet, and by that I mean pulling liquidity from the sell side and allowing price to move up so far so fast. If anything, that's what I've been seeing. And not even static resistance getting eaten. I'm watching static, what would or otherwise be sleepers, be pulling orders and creating a less liquid sell side book, causing these very fast moves. You know, a fat finger buy goes from maybe thousands of Bitcoin to 100 Bitcoin, right? And then that could move the price, trigger stops, and kick off a FOMO run too. We had a nice 10% day the other day, finally a double-digit day in Bitcoin, right? Oh, but there's one very important thing that I got to point out, and I cannot leave without saying this. This is very fucking important. This has me pretty stressed out, I would say, if I was a bull. We hit a daily 9 sell. We hit a weekly 9 sell next week. We're on a monthly 8, closing out this month and opening the next, most likely, you know, in all probability on a 9 sell. So this is pretty significant to me that there's a huge confluence of 9s on large time scales. So I'm, you know, that's not gonna make me the most bullish motherfucker in town if I'm seeing a monthly 8, a weekly 8, a daily 9. You know, we're getting all of them at once. This is kind of, if you got this on a 1 hour, a 2 hour, and a 4 hour, you would be pretty confident. You know what I'm saying? And to top it off, this is the third 9 in a sequence, 2 of which have been blown just completely out. You would have just been nuked on these 2 9s. So
see that's the way I look at it, Joe. I look at it as the more shorts, the higher it goes, because on a bull run, people keep trying to short it, and they keep getting squeezed, and they get and if it can happen again, not to say that it can't top out and go down, but if it gets into another 9 that's already been blown out twice, what's to say that it's not going to get blown out again and get squeezed? So that's where the indecision comes into play right now.
Yeah, fear greed index. Of course, there's a number all over the place, but you know, we're leaning into the greed. You know, kind of tiptoeing near this extreme greed area. Of course, there's some greed indicators that are suggesting much higher numbers and levels. So I don't want to rule that out, but you know, I'm kind of with you. You know, this is a volatile asset. It can counterplay the market. It can you can run with it 3 times in a row. It can run against it 3 times in a row. I just wouldn't bet that your third 9 after 2 complete blowouts isn't going to get at least a 1 candle pullback.
Oh no,
So,
I'm with you. I think the price is up against major resistance in many different ways. So if it's going to reverse, this could be a definite spot for a reversal for sure.
yeah, that's
What I'm saying. But what I'm saying is if there's a lot of shorts and it doesn't, it's just going to blow out again because they won't be able to hold on to them.
That is also very possible. I mean, we're still in the same situation that we were in, go above 14.5. We're in a liminal space, I guess, for the sellers, where they really don't. Sellers always are in a theoretical territory, by my argument. So if sellers are always in a theoretical territory and price is extremely bullish, then what is their incentive to cap the price? And I don't really, that's what less liquidity in the book means, right? There's less people that are incentivized to sell. So I think that at some point, someone's going to want to take profit. At some point, that's going to mean more people want to take profit. And that's that indecision period that I see us in right now. Some sellers are saying, yeah, this is the time to take profit. And we're starting to get those sellers to pop into the market consistently. So I'm going to lean toward, this is a bit dangerous for my liking. Especially, I mean, even with this high, coming back and then finding signals that are reliable. I mean, this is starting to mean, I think, that people feel that the top came in. So there could be a complete counterplay, which is why I am a scalpy Joe over here, scalpy smoking Joe, because I really don't like to play long-term stuff. But I will also add, if we have some gold mine show up somewhere, then I'll start to feel a bit more confident that the trend is still intact. But right now, the microstructure is looking like it's falling apart a little bit, which isn't a bad thing. It just means we might have a little pullback, and then hopefully we kick right back off to where we were, and continue on.
Yep, no, I'm with you.
Well, thank you very much for sharing your analysis. As usual, I get a lot out of it, and you brought up a few things that I would like to discuss. First thing is something you've mentioned a handful of times on the stream that I haven't really been able to respond to because I guess I've needed to give it more thought, and that's your idea that the sellers are always in the theoretical territory. And that's an interesting concept that I would just ask everybody listening to think about for themselves. What does that mean? What do you think about that? Do you think that that's right, or is that wrong? That doesn't matter to me as much as does it provoke any interesting thoughts or ideas, which it certainly did for me. And my conclusion is that I don't necessarily agree, but with that the sellers are in the theoretical territory, but I do think that I agree with what you're saying in general, what the concept of your idea. And I guess just my conclusion is that whoever is underwater on the position is in the theoretical territory. When we all know what it's like to be underwater on a position. That's really the liminal space when you're approaching that stop loss and it's starting to get scary and all that. That's the theoretical space. Whereas if you're in profit and the market moves against you, it's really not theoretical. It's not scary. It's what you mentioned, the incentive. It's if you have profit on the table and you're incentivized to take it because the market has moved against you, or because it has moved so much in your favor, then that is what is the most important thing to me in terms of not the sellers, it's the incentive. And the ones that are in profit have the incentive, and the ones that are on the outside of the profit are the ones that are trying to FOMO into that in one way or another. And that's exactly, I think this is a really good time to just talk about that in terms of another thing you mentioned about this being an indecision period, which I think that's exactly what I'm seeing and exactly what I would expect to see at the crux of a hyperwave phase. So I've been posting some charts with like hyperwave fractals that the Bitcoin right now is kind of developing that hyperwave pattern, but on a smaller time frame. So hyperwaves happen on the weekly, and we've been seeing it on like the 4 hour and something like that. And when it gets to this point where it wants to establish a new phase, there's a big struggle and an indecision period from two things. first of all, the guys that are in profit, and they've made all this profit from the run up, whether they bought at 14 or 12 or 11 or way below that, they're taking a lot of profit because they've got all the incentive to take the profit. They're up a ton of money. So they've got that. And then there's these guys who didn't make it. So they're kind of on the outside thinking, man, if I just short it right now, then maybe I could make what I just missed out on by not buying at whatever price I didn't buy in on. So that's the fight that is going on at this sort of period where what I think of it as a pressure cooker. You build up this pressure, and if you don't have any pressure, then it's just going to kind of keep doing what it's doing. An object at rest stays at rest, yada, yada, yada. Whereas when you get to this point where there's this pressure built up, it's either going to dump, or if it doesn't, if there really is enough demand for Bitcoin at these prices or at these voodoo levels of support or whatever it is, if that holds, then it should lead to that accelerated phase. So that's what I'm so interested in seeing myself, is if it holds and leads to that accelerated phase, or if it doesn't. And I completely agree with you in terms of it is a very contentious point in the price with what both of you were saying. And I guess I lean with Fibbo in terms of the shorter, if you, one thing that I would say is that if you have no rules, if you're trading, you have no rules, like you're just trading and you just kind of buy because you wake up today and you want to buy and you read something or whatever. If you have no rules, I would implore you to consider taking on the rule of never short Bitcoin in a bull market, because if you are trying to make money shorting against the trend, it's going to be really, 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 really hard to do. And if you're trying to short against a trend that is the biggest bull trend that humans have ever seen, there's never been a bigger bull trend ever than Bitcoin. So if you're trying to short that trend and you don't have like very, very specific rules for here's my stop, here's my profit, and this is why I'm entering, yada, yada, yada. The first rule that I think you should take is just do not short during a bull market. And this is a rule that a lot of people do not have, and they just keep shorting and they just keep getting stopped out. And that's kind of the fuel that I think is going to blast us through the top phase. So I've been blabbering for long enough. I do.
I mean, that's just one thing I always, when you get a strong bull run going, it doesn't matter if it's Bitcoin or whatever market you're in.
Right.
I always like if the more shorts that come on the market, the higher it's going to go. That's just the way from my experience. And when you see it in Bitcoin, that's a no-brainer, because you got a lot of people that are probably shorting the market that has never shorted a market in their life. You know, they're just like, oh my gosh, I could sell it up here. Look at it, it's at 18,000. And like you said, if you don't have any rules, you're not going to last long. That you're just going to get eaten up, and it's going to go against you pretty fast. So that's what I meant by the more shorts, the higher it goes. That's what I meant by that.
100%, and I couldn't agree more. And I'll even add on that in terms of once there are no shorters left, that's when the market will top. Once there are, everybody that has been trying to short gets wrecked and stopped out, and now everybody is long, and there are objective metrics showing that everybody is long, which is something else I was glad to see you bring up. That fear greed index is something I'll touch on here when it's my turn. I've been taking more time than I need to, but I've actually been developing my own fear greed index over the last couple of years. It's been a long time in the work, and I just finally announced that I have a working prototype that it's not available yet, but it's going to be very, very soon. And the reason I announced it was because the other fear greed indexes that I was looking at were showing extreme greed kind of before that last leg up, whereas I'm seeing right now, as I was then, nothing but a healthy market with it's an equal fight. If you look at the objective metrics on the premium in the futures, in the futures markets in Bitcoin, combined with the premium in the funding rates for lending, whoever is, if there's too many longs, it's going to be too expensive to be long. And right now, it is not too expensive to be long through funding or through futures. And when that's the case, I view it as an even fight. And when there's an even fight and a trend prevailing, that's when I just have to bet on the trend prevailing, because as a gambler, that's where the odds lie. And until there's that really imbalance situation where you have that kind of pressure cooker, but now all of a sudden you have a 6% premium in the futures and a 0.05% premium in the funding, sustaining for days, 3-4 days on end. Now we're talking about a pressure cooker where everybody is long and nobody's short anymore. So right now, me personally, I'm seeing a pressure cooker where it's an even balance in a bull trend. And Joe just brought up a bunch of really good points in terms of this is the things that we should be thinking of are, just the risk of longing up in this territory. And that's a lot of what Joe was talking about is, it's damn risky to be longing after a move like we just saw, because that is what everybody is, it's going to be a lot easier to buy Bitcoin after this move than to short it. And if that's the case, and we're saying that the shorters are going to lose, then it may not be so easy for the buyers to make money either. And what Joe was talking about is this, there's been a lot of good signals up until this point that have offered a lot of profit to be made. And now it's a very, very good time to be scaling back on risk after a move like that. And that's the main thing I wanted to touch on before I ended with my diatribe here. And it's a concept that I first came across from Peter Brand. It was just a quick tweet that he sent out a couple of years ago, and that most people increase leverage at the end of a trend when you should actually be decreasing it at the end of a trend, in less words. And that was something that I, again, had to think about. I mean, is this right? Is this something I agree with? And it was like, yeah, of course. Once the trend really goes and you get good signals, and they work and they're profitable, now all of a sudden you get more confidence and you take more risk. And then if you just take a little bit too much risk at the wrong time, you lose all the money that was made on the good signals beforehand. So everything that Joe was saying, while I disagree maybe with the direction, I mean, he's kind of neutral, saying that maybe it's chop, maybe it's top. He's just kind of turning neutral from bullish. And I'm staying very bullish myself. So whether or not I agree with his analysis, the most important thing is how he's trading and how he is now starting to just kind of ease off the gas, opposed to really stepping on it. And that is critical for. At first, we were talking about people that have missed out, but think about people that have been in. Many people that have been in on this move have been thinking about, man, why didn't I buy more? I knew it was going up at XYZ. Why didn't I buy more? And if that's what you're thinking about right now at this time, you're going to find yourself in a load of trouble. So I really appreciate what Joe was saying. Just looking to limit risk and just kind of ease off the gas. And yeah, if I get a great signal right here, I'm in. I'm going for it and I'm going hard. And in the interim, maybe I'll go in a little clear. Be happy.
And no, he makes. I mean, when you bring up those the TD numbers, it makes complete sense. Even if you don't even look at the sequential and say, if you just look at the charts, this is an area of major resistance. If you're going to sell the market or go short, this is probably the area that most of the guys are going to do that, because that's where it makes sense to do it. But you also have to take into consideration everything else that's going on, like what Saul was talking about. But it's good that we put that in as a risk management type thinking, and I like what Joe's doing by easing back and not shilling Bitcoin to everybody and his brother. That's not. I mean, and there's a lot of people that are doing that, and it's the wrong time to do that. So like when Joe steps in and gives you a little bit more in the short term, let's watch for this because things are starting to change a little bit. That's very helpful for people that are looking at it in the short term, for sure.
Yeah.
So.
And thanks again for the input, and I'll let Joe cap off his thoughts because we've thrown a lot his way there. But I guess the last thing I got to say there is, if anybody's been shilling Bitcoin, it's been me, and I've been shilling it as hard as I can possibly shill it to everyone and anyone. I think that right now is the time to do it. In my opinion. Specifically, if you've been talking about over the last few years. So I've been telling my friends and family since 2017, to buy in. And what happened? 95% of them just, told me to go fuck myself. And then they watched the market crash and they thought that they were right. And now I get to shoot them a text and be like, hey, Bitcoin's approaching the all-time high. Bitcoin's $17,000. Bitcoin's $18,000. And the responses that I'm getting are like, what? And the difference is this is below a 3-year high. Like I've been tweeting a tweet that I just sent out that I was actually pretty happy about was a text that I got from my mom. Look what just arrived in the mail. What just arrived in the mail? It was the Bitcoin Standard. I just bought my mom the Bitcoin Standard and sent it to her and was like, hey, I would love to talk to you about this. I've been showing it to her for years and she's been like thinking, what is this voodoo bullshit? And now it's starting to come back. It's not at the top. It's not anywhere near where I think it's going over the next couple of years. So this isn't what Fibbo was saying in terms of if you're shilling it over the short term, next couple of months or whatever. I'm just saying that this is, in my opinion, the best time. Something I've been thinking about in my head over the last couple of years is when am I going to be ready to go all in myself on Bitcoin? And then when am I going to be ready to start talking to my friends and family again about Bitcoin? Those were two different things in terms of I was ready to bet my money before I was ready to start telling my friends and family again, because, I want to be more confident in what I'm talking about in terms of the trend and that sort of stuff once I start talking. Whereas I'm ready to put in my money when there's a good opportunity. Right now is the time that I don't want to just be shilling it to people who are trying to get rich. I want to be sending them the Bitcoin Standard. Like my mom, I'll take a little sidestep here to just tell the audience, anybody who's been listening to me for a while, maybe has seen me talk about Sundays being a very important day to call.
Hey, let me just jump in real quick, because I actually have to go, but I will be watching. But much love. Thanks for having me, and I'm definitely having fun listening. But I'll have to listen as a audience member. So
yeah, we knew you had company coming. So
yeah. So much love, guys.
Thank you for joining and looking good as always, even a little better than usual. Top button up with the sunglasses. Smoking Joe, I'll tell you what.
Thank you, man.
Later, Joe. Love, man.
Yeah, thank you, Fibbo. Love you both, man. Take care, guys. And everyone, thank you for tuning in and hit that like, hit that subscribe if you haven't already, and support the channel. Much love, everyone. Peace.
Later.
Thank you. And so yeah, I was in just getting into just a shout out to my mom, who never watches this show or anything like that, but I just wanted to put that out there. I've been, we're feeling the love here today. And one of the main reasons why I believe in Bitcoin is because of how my mother raised me. And my mother raised me to not believe in debt. She always told me to just pay for what you own. And she just is the type of person that just did not believe in credit cards and all this and that. Like right now, she's been a teacher her whole life, never even up to like middle school, like a, middle school, elementary teacher. Right now, she has her house paid off. She has zero debt. She's got, a car. She's not only told me what she believes in terms of, I don't believe in living off of money that I don't have, but she actually showed me out of the last 20, 30 years, the debt bubble that we're in is a result of the boomer generation in a large part of living off of what they don't have. And there's something that I'll just always appreciate from my mom is just how she lived and the morals that she instilled upon me. And that is why I know that when I send her the Bitcoin Standard and just tell her, if you read it, I'd love to talk to you about it after years of trying to get her to understand the value propositions, I just know that something is going to click. So I would encourage anybody out there to just, reach back out to the friends who you talked to in 2017. 2017, that wasn't really the time to shill it. If you were shilling it below the high in 2016, well, okay. So if the people that you were reaching out to that didn't really buy in or had questions, whatever, this might be a good time just to let them know, because we can't deny that the first thing that gets us into Bitcoin is the price. And if the price is going straight down, none of us would have ever had any interest. And therefore, once the price starts doing what we've hope for it to do, it might be a good time to just reach back out or just send somebody a book, specifically the Bitcoin Standard. All right. So
no, and when I say chill, like I've been talking to people about Bitcoin for years and years now, and I don't have to shill it anymore because when the price goes up like this, they come to me, so I don't even have to talk about it anymore. It's like they bring it back up. I don't even have to bring it up to them. They actually bring it back up because they hear it in the news, and then they say, what's going on? What's going on? And then I kind of fill them in and that kind of thing. So I don't even have to go out anymore to shill it. They actually come to me. So that's a good thing, I guess, because they do remember me talking about it, I guess. So
this is a great thing, and this is what makes me happier than anything else, because this is what I've been experiencing myself, is that I've already had my brother-in-law I had a conversation with in the last week, my mother, like I said, and then another friend, already having these conversations. Already had a friend bought in a few months ago. Already people are starting to get it, because the Fed's talking about how they can just print unlimited money, and it doesn't take too much to understand why that just doesn't work. Whereas a couple of years ago, it took a lot to freaking understand why you would ever want to buy into Bitcoin. And even if you could take that leap of faith that maybe blockchain had some sort of value, trying to understand why you would buy into Bitcoin versus something that's faster and cheaper, it's just a totally different environment. And just hearing, anytime I hear from somebody like yourself that you don't even have to reach out anymore because they're contacting you, and then that's also what I'm experiencing. And what I would say to anybody listening that's watching this, if people aren't reaching out to you right now, have you been doing your job? I mean, or have you just been trying to get rich? I mean, like, what are you in this for? Like, seriously, I mean, this is, we're in this to change the world. And to me, that's what matters. Like, to have the opportunity to actually change the world.
Yeah,
one person.
Yeah, the talk when people talk about it, the main thing that I have found in these conversations is we live in a world of just excess, and we can always get more. Everybody lives in this infinite world of just printing money, and they've lived their whole entire lives with, well, it'll be there because they just print it. And it's really hard to get that conversation and that mindset to think on a finite level of something. And that's the discussion I've had a lot with people, is they just don't understand how that would even work. When we live in a world where, you just spend more than you make. I mean, that's basically everything. The government and everybody has budgets, and they always spend more than what they budget, and then you end up in debt. So, but that's because they can just print their way out of it, and eventually it collapses. That kind of the house of cards kind of thing. But that's where the conversations generally end, is trying to get their mindset on understanding a finite supply, because they've always lived in a world where the supply is never finite. So that's the whole, I think, the struggle that I think a lot of people, at least the people that I've been talking to, have a hard time grasping that concept. So that's what we've talked about a lot. But I'm going to go on to some charts. Let's do that. So let me.
Absolutely, and yeah, I thank you for indulging in my
No, it's good stuff. No,
ideologies there, because yeah, that is at the end of the day why I'm here and why I'm doing what I'm doing.
Yep. No, good stuff, man. No, I'm going to start out with just the hourly, just because it's been changing a little bit. We got up. The last threshold on the hourly was way back about 16,000 when it went into this bullish zone here, and then it rallied all the way up to the 84.88 here on Coin. This one's on Coinbase. The reason I do Coinbase a lot is because that's where I get a lot of requests. So the 18,488 was the high. I actually sold some of my short-term stuff at 18.2, the stuff that I was long at 11.3. And I've actually bought back in on this hourly, kind of scaling back in a little bit in this range right here. And the reason for that is we worked our way down here, and this line right here is where we broke down into the bearish zone right at this point. And the interesting thing is it came back down here, and there was a low here and a low here that created this trend line. And when the price came down to this point and bounced off of it, and then it broke out of this kind of triangle-ish pattern that I had on here, it broke to the upside right here, and it went up to right at the edge of this bearish level, and it needed to get above that level to bring us back into the bullish zone. It actually ticked just a little bit above it. So you can kind of look at it two different ways. And the first way I'm looking at it is that we're still in the bearish zone. So when you look at this threshold right here, this vertical line, and you take from where the ADX started to increase just a little bit on this break, I actually start the fib at this red candle right here. So to me, that's where the psychology started to change a little bit, and it worked its way down. Now it held at this trend line, which was a good thing because we got higher lows. And then when it broke here, you set this fib, the 38.2% level was right there at 17.5. It's really tight. But then it went up to the 61.8% at 17.7. And then it broke the trend line, went all the way up to the fib extension that I like to look at for a possible reversal of the leg, which it went right up into that zone and held, and then it started to work its way back down. Now I've been scaling in right around in this area right in here. I bought some at 18. I bought it at 17.9, and I actually got a fill a little bit ago at 17.8. And I'm just kind of scaling in small percentages to go along with the long, because I sold 50% at the 18.2 from 11.3, and I couldn't pass up 50% or a 50% gain. I just can't not sell when my goal was 17.1. So once it went past 17.1, I just put a stop in, and I kind of kept raising my stop, and then it finally got me out at 18.2. And then I was just kind of looking to maybe get back in at another time. But I like what I'm seeing here so far, because when you break this trend line, this is kind of the area where you should, when you get a throwback to the line, because when you break a trend line, it could do two things, right? Or in this way, you're going up, so it could either get bullish or it can go sideways. And right now, it's still kind of this sideways kind of market. Even though we're in the bearish zone, it's really not strong bearish because the momentum is really low. So you're kind of in this sideways to a little lower. But what I like so far is that on the throwback to this break point is the 61.8% level. Once it broke, it made that full retracement. Coming back into this zone right in here is where we should find some buying interest, right around 17.7, 17.8. And so far, we're kind of getting that. We're not getting a lot of momentum behind it, so it's not like the best trade in the world. And I'm not saying everyone should go out and buy right here. This is not financial advice. I'm just adding back some of the shorts or the sells that I did. So, but I like what I'm seeing here on the hourly at this point. Now, of course, this trend line is going to become very significant. So, and also this 144 EMA on the hourly, because it's been holding as a really, really nice support level on the way up. So if this does wick down, this 144 is an area I'd really watch. And I would probably stop some of my stuff out if it ended up getting down below the 17.1 or a little bit lower. Basically, I'll look for 3 settles underneath this moving average, because as you can see back here, it kind of wicked a little bit here and there, but it never really settled, the majority underneath that line at all. So that's one of the areas I'm still looking. So I'm dipping in here a little bit to see how it works and see how it goes. But one thing I'm looking at is the break of the trend line. I always like to take the furthest point underneath the trend line. I have an arrow here. So if you just clone it and then move it over to the break point, right now, the break point from that puts us up around this 300% level, just above 19,000. So for me, if this holds in this area, my goal is for this to work its way up into this area right in here. So that's what I'm kind of looking at here on the hourly. And another thing, this dotted line I have on here, these are just the Fib Trends. So you take the low here at my threshold up to the high, and then you take it back down to the low, and you can see the 61.8% level here is a target, and then the 1 would also be a target. So this 16, this level right in here is just above this. What I would think would be the next resistance level is the extension between the 227 and 241, which is 18.6, 18.7. So if this pops up to 18.6 or 18.7, it'll probably work its way back down, keep 18,000 as a support level, and then work its way up to that target, which would be up around 19,000, 19.1, somewhere right around there. So when you're looking at it from an hourly perspective, I'm hoping that this pattern holds true and it kind of holds in here, bounces, and works its way up. Now, I'm not thinking it's going to happen overnight, but it definitely could go sideways for a little bit. Actually, it could go sideways for a while if it wanted to, and then kind of run into this, in a couple of days, it runs into this trend line, and we just stay sideways up into this trend line and go up. But so far, I kind of like what I'm seeing here, that the market's really not falling out of bed, even though it's in the bearish zone, and it's all because the momentum's really low, and we're working sideways. So that I just wanted to kind of give an update on the hourly. I don't trade the hourly very often. Most of my stuff comes from at least the 4-hour or the daily, but every once in a while I'll kind of jump in and try some things out here on the hourly.
Quick question there,
Yep.
Fib. I've got basically the same pattern with a different target. Could you explain why you would be using the triangle to measure the move opposed to the trend line? Like I'm
not using the triangle. I'm using the trend line.
So the blue arrow, it's measured from the bottom to the top.
Yeah, it's coincidence. It's
the same as the
the low right here is the furthest point, because I always like to measure the furthest point from the trend line. So in this case,
that's I guess that's what I was alluding to, and maybe I didn't clarify. So that's how you're measuring it, and that's got all the validity in the world. I'm just wanting you to explain for me how I measure it is using that prior run up. Like I'm seeing it as a bull pennant, where the pole is what is measured for the move. So that diagonal that you have drawn is what I'm using to measure the move. Okay. And just curious to hear if that's something you're looking at, considering.
No, that's another way of measuring. When you measure that, what does it come out to be?
20,000.
Oh, it's 20,000 move. Yeah, but that's a whole different pattern though, because you're looking at.
Right.
Are you doing it off the hourly, or are you doing it off like the 4-hour?
I'm doing it off the hourly,
okay.
And just viewing it the same as like we have the triangle consolidation following the run up. So I'm viewing it as a pennant, where the pole would be to measure the move.
Is your pole start down here at the low?
Yep, it's just how you have it drawn, just like that.
Okay, so you're taking this distance and taking that distance again.
Yep, exactly.
Okay, I got you. Yeah, whenever I measure trend lines like this, and I'm taking this one out because it's really the trend line that I'm measuring at this point in time, not the triangle. It just so happens to be that the furthest point underneath this trend line was this point right here. So it just so happened to be the start of that triangle. So what I like to do on trend lines is take that furthest point and take that rate of change, whatever that is, and take it from the break point and measure it. Now, typically, this is a minimum target. Like if I'm trading this would be a minimum. So I would probably get out half of my position at that point, and then use other tools like what you're using to find further out targets. So anything from just a trend line break like that is a minimum. So I could probably show in some other stuff. If there's one that I can see if I have another trend line on here. Let's see. Like just take this one, for instance, right here. This trend line right here on the weekly.
Mm-hmm.
If I take this distance underneath the trend line right here, and then clone it and move it to the break point of when it broke out, my minimum target would have been 15.3. So that would be the minimum. Like if I was trading this, as long as this trend line held, I wouldn't sell it because that would be the first target. And then I would use other things for second, third targets, those kind of things. So just to use that as a quick example, I just had to find one real quick. Yeah. So that's just using the trend line. Now there's other patterns like what you're using, pennants or flags or anything like that. They have different measurements and you can use them for other things. Maybe for a second target, those kind of things. But I always like to look at on the hourly on the trend lines for sure, because everyone wants to know where that quick target is, like the one to really look for in the near term. So that's what I was kind of using it for. Yeah, you bet. I put a little. I'll
be right back.
No problem. I put this a quick little 3-minute video out this morning, so I'm going to go through this since we got a little bit bigger of an audience. I thought this was kind of interesting. I'm looking at the weekly here, and I was looking at a little bit of a timing issue based on the fibs. So if you look back in 2014-15, when we had a high at 1,163, worked its way down to the low at $152. We had a 61.8% level at 776. Now the market worked its way up and hit this 61.8% level right here, then dropped a little bit and then came back up. But it's when it started to trade above this 61.8% level, and I have it highlighted in green here. It broke that, went all the way up to the full or pretty close to the full retracement, came back down and used it as support, and then it worked its way up and then made a high and then retraced again. So what I measured was, which was actually 13 weeks, since this is a weekly, that right when the market traded into above the 61.8% for the first time, and then it worked its way up, and then once it broke into a new high and made or an all-time high here, and then 2 weeks later it made a little bit of a high and then it corrected. So this 13 weeks is a very interesting timing for me, because when you jump over to where we're at today, you had a high at the 19,666. This is on Bitstamp, so the high is a little different than probably some other exchanges, but 19.6, and then it worked its way down to the 3,100. The 61.8% level was at 13,346. Now it worked its way up here, touched it, didn't break, came back down, came back up here, and then I did the same timing to where it just broke the 61.8% level, and then right now it's working up. And the interesting thing is the fourth week in is when it tested pretty close to the high and then retraced back to the 61.8% level. And right now we're in that fourth week. So what Joe was kind of talking about, you're coming into this area of possible resistance, or a place where a lot of people would want to sell. And right now we're getting into that fourth week. If you look at the same kind of timing that we saw back here, that if we get up into this point, we could retrace back to the 61.8% level, which is at 13.3, and then work its way back up, and then bounce from there, and then make a new high, basically on the 11th week, which is this vertical line, when it makes a new high, and then the 13th week would make the next high, and then you get the next correction. So I thought this was really interesting, because the timing's working out pretty well so far on this. And not saying that this is exactly going to happen, but I like the way it's looking. And the thing that kind of blew my mind when I was looking at it was, for one thing, 13 weeks is a fib number, which is kind of cool for one thing. But the timing of it is 2 weeks. Like right here, it broke a new high, but then it was 2 weeks before it made a high before it corrected. So if that happens, the timing of it would be January 4th for the high to make a new high. And then 2 weeks later, you would have a higher high before it corrects. Now, the interesting thing is the January 4th when I measured this out, because a while back when I was looking at this chart that I was talking about probably on our calls a couple of weeks ago, when I went through all this timing, the timing for me to get the all-time high is January 4th on all of this timing. So when I was looking at this chart, and this measures out to be January 4th, I was like, okay, this is just weird shit. So this is when it's like, okay, something's weird. So that's why I wanted to show it to some people just to kind of keep an eye out for this type of pattern. Not to say that it's going to happen or anything like that, but it's a very interesting one to keep an eye out for. So for this timing, if this kind of works the same way, once you broke the 61.8% and got the full retracement and work your way down and then back up, if it works the same, January 4th is the high. Based on this timing. So I thought that was just really interesting on how that worked, along with this was all based on the timing of the halvenings all matching up at the same time, and where the new high would be, and then the ultimate high post halving, all that kind of stuff. But the January 4th is what's really weird to me on how this worked on this chart on a timing issue for a totally different way of looking at things, and then looking at this one and seeing the timing. So I just wanted to share that, something interesting out there on the time in the cycle world, I guess. Other than that, the only other thing I had to talk about was just the daily. I just wanted to show you the update on the threshold numbers. We're still well into the bull zone. Everything's still looking pretty decent. We are up in this green zone, which is between 16.5 and 18,000. And that's the whole zone in here. I had 17,187 as a target from when I got in at 11.3, and that's when I got out at 18.2. But this zone right here, this whole green zone is where we should kind of top out and work our way back down, possibly. So, or what I'm looking for is I like to see the movement based on breaking these fib extensions. So whenever we break the 127 to 144, and what I did was I wrote right here, 3 daily settles above the 141, which is right now it's 18,012. If we can get 3 daily settles above that 141 level of 18,012, that's when I would call an all-time high on this leg. If we don't do that and it holds this resistance, then we work our way down to this trend line and the shallow fib, which I show as key support at 15.5. And then you have the critical support, which is around that 13.7, which matches up, on some of these other levels that we looked at on here. If it drops all the way back down to 13.3 at the 61.8% level, that could be an area of buying interest if it retraces all the way back down before it bounces back up. On the daily, I like to see 3 settles above that 141. We haven't settled yet above 18,000. We've been pretty close, but we haven't settled there. It's all been in the 17.8, 17.9s. So nothing above there yet. So that's why I'm hesitant to do anything crazy at this point. And Joe makes a good point that you're getting into this area where we could go sideways to a little lower. But that's what I'm looking at on the daily. Either A, we're going to break this to the upside. And then if you do break the 141, when I say all-time high is likely on this leg, because typically if you break a 141, the 200% level is usually the one to watch. And in this case, it's 24,000 or basically 23.8. So if we get 3 settles above it and the momentum's still strong, that's the next leg to really watch. But we haven't done it yet. So I'm just kind of keeping an eye on that. So I just wanted to show you the levels that I'm still kind of keeping an eye on when it comes to the threshold levels here that I'm watching. So that's basically what I got. Unless, right here on the weekly. Another reason I had the 17,187 or so. I think the high on this candle right here. The high of 17,178. That's where my 17.1 target came into play. Because I had the red arrow here that matched up that 127. My target was at that kind of in the middle of this range, and that's where that 1812 comes into play, or 18,012 right here, as we're kind of topping at that area at the moment. And then on the weekly, you got the all-time high here at 19.8. So in other words, if you break this 141, you have no resistance zone from that 18 all the way up to the high, really. And then you got some upper targets above that. But that's where all that's coming from. Some of those levels. So that's what I got. Saw any questions?
Well, I wish I did, but you did such a good job at explaining as usual. I guess now that I'm looking, one thing jumps out at me that's been going through my mind as Joe's been pulling up the nines on the TD sequential. I personally have a lot more trust in the ADX to signal exhaustion. If I see a 9 in the TD sequential and the ADX showing no signs of exhaustion, then I think that the nine's a nothing burger. And I'm
So
kind of
do you bring the nines and a turnover on the ADX when it's up, like if it's up around 40 and it starts to turn and a 9 hits, that's a good signal?
I wouldn't even necessarily wait for it to turn, but I might look for it to get to a little bit higher level of resistance, like 40 to 50 on the ADX, if I'm remembering right, is the level where I expect to see nines get blown out. Whereas once it gets above 50, even if it hasn't rolled over and I see a 9, now I've got an exhausted ADX and a TD9. Now that's something I'll act on. Something that I've talked quite a bit about on the stream in the past. So yeah, I was just kind of curious to see now that I was looking at the ADX on your chart on the higher time frame. Maybe that's the hourly, but the daily, it's just not looking exhausted to me necessarily. Are you seeing any signs of exhaustion yourself?
No, not yet. That's why, since I haven't seen any signs of exhaustion, that's why I actually bought in here on this move to the downside. Now, if I started to see some exhaustion, I probably wouldn't be buying anyway. But given that the way this is all kind of setting up, even on the 4 hour, I forgot to bring that one up. The 4 hour, once we broke the 127 to 141, which is between 16.4 and 16.6, it kind of touched it here, and then it went back down, came back up, and then it broke, and then you had this kind of little level here where it held and went to the upside. And since we broke that level, the 200% was the next target, and it kind of worked its way right up to that point. Now this 200% at 17.6, if you draw this horizontal out here, this support is holding nicely on the 4 hour. So even if it comes down to that 17.6 level, we're well into the bull zone on that, and the bulls are, they're losing a little momentum because everything's sideways right now and consolidating, but the bulls are still in control, and the support's still holding on the 4 hour. Now with me buying on the hourly here, what I'm watching really is the 4 hour, because I want to see if this dip. I'll be long until this 4 hour breaks out of this bull zone on the RSI, which it needs to get. It has a little bit of room to run to the downside. But what I like is that support's holding at 17.6 on all these tests that it's done. Yeah, it's wicked a few times underneath, but it's held pretty nicely. So that being above that 200%, and it's done it more than 3 times. At first you were looking for that 3 days above, or 3 4 hour candles above, but even on the retracement, it's held. So that corresponding with what I'm doing on the hourly is all working kind of nicely. That's why I kind of nibbled in a little bit and add some small percentages. So see where it goes. But I'd like to see some momentum get into this thing and get out of this doldrums that we're in off this break. But it's holding for now, so we'll see what happens.
Is that a bull flag to you? That little 1 hour action we're seeing right now? Just the last few hours.
I mean, I guess you could. You're talking about right here. Yep. And then down and then up. Yeah, I could see something like that. If it breaks out to the upside, yeah, I could see that measurement there, which would probably put us about, up into that 18.6, 18.7, probably, just eyeballing it.
Yep, I've been watching that myself, and I do think that's a bull flag developing, and I can, I guess, discuss that briefly myself. So yeah, right. Thank you for sharing your analysis as well as your critical levels. That is, I'm sure, a big help to everybody watching. So thanks again, as well as for fielding the questions that you do so consistently. Anybody who has any questions, direct him at Fibbo, and if he has any time whatsoever, he will be certain to get back to you. So I'm gonna start out by just going through a couple patterns. I think that when markets really get moving, patterns are very, very effective. It's like when the markets are moving, the best ways for traders to set their their orders is based on something objective. And when markets moving fast, patterns will paint quickly and they will be very objective. So you'll get something like this where, you got this sweet little bull flag here where you would measure the move based on this break, and it would give you something to like right here. And there you get a little correction, and it, it does continue. And as it continued, you get another little one. I didn't have this highlighted, but looking back in hindsight, you see how you kind of have this another tight little consolidation pattern where people that are trying to trade the fast markets would be using that to measure moves. And then when you get a well-defined measured move and it doesn't reach it, that's something to pay very close attention to in terms of, I just view that as front running. People have made so much profit that they just don't care about waiting for up here. They're just going to start probably selling once it breaks this high. And then depending on how many sellers are there, if there aren't too many, then you would expect to reach the price target like it did here. Whereas here it kind of got hammered down. So that's definitely something I'm paying close attention to. But something else that is much more important to me is how when the markets really start moving, I expect them to start painting bigger patterns. Think about it like a snowball rolling down a hill. As it gets rolling, it gets bigger and bigger and bigger. So therefore, if Bitcoin is kind of rolling up a hill, or however you want to think about it, the patterns potentially should get bigger. And that is exactly what I'm seeing myself. One of the things that I stopped Fibbo to ask about how he was measuring his move in terms of, I'm viewing this as, so a flag is kind of the channel pullback, whereas a pennant is the symmetrical triangle consolidation following this sort of action. So I'm myself viewing this as a bull pennant that's unconfirmed. So an unconfirmed pennant is worthless. But if it does confirm, then that is most certainly what I would be using to measure my target. And then, let's just say it kind of confirms somewhere in that area, you would start this from the confirming candle. So we'll just say it's, somewhere in there, and kind of zoom out. And that gives us a price of 20,500, which is very interesting, obviously, based on that being the prior all-time high. And that's something I pay very, very close attention to, is when I get a pattern target that lines up with a horizontal. Something I've talked about a lot in terms of, if I was to see this target, I wouldn't care about it too much. It's a 1 hour chart, and it's a stupid symmetrical triangle that could just, so many things could happen. So I really wouldn't care about it too much.
Stupid triangle.
Well, specifically symmetrical.
Yeah, I know what you're saying.
But so what really makes me pay close attention to those types of patterns is when they line up with prior established horizontals. So when I'm seeing something along these lines that could provide some sort of head fake above this horizontal, that's something I'm much more intrigued in than if it was just some sort of random stupid triangles. So the next thing that will appear is going to be that big nice red triangle. This is not a stupid triangle. This is one of my favorite triangles in terms of I believe that rising wedges and falling wedges can be traded to both sides.
Yeah, I was going to say that's probably a wedge, not a triangle.
Well, I mean, is this not a triangle? Is a wedge not a triangle? I mean, come on.
A wedge, it, by definition, is two trend lines that are going in the same in an upward direction. So a triangle is lines that go in opposite directions.
Well, all right. Yeah, I agree.
I'm just messing. That's just textbook stuff. No,
But
no. A wedge. A wedge is two trend lines that are increasing, and then a triangle is a decreasing trend line and an increasing trend line, or a flat trend line.
I will agree, but I am like to consider myself a bit of a mathematician in terms of I just believe that math is the only true language of the universe, and in terms of the definition of a wedge is rising trend lines, but they have to intersect, and if they do intersect, that creates a triangle, a geometric.
No, I know what you mean. I was just messing.
So I do think that this is a triangle, but yeah, of course, a wedge. But
I was having flashbacks of when I took the CFT exams. You know, you have to actually know the definitions of the actual patterns to pass the exams. But yes, I do agree. It is geometrically a triangle. I'm with you.
Isosceles, is that right? Some mathematician.
Sure.
So, anyways, I think that wedges are very important in terms of they. I haven't seen many other people talk about this. It's something I've talked about a lot in terms of I think they can be traded to both directions, and I prefer rising wedges that break to the upside.
No, I do too. I think they're one of the best. They're awesome to trade. They don't happen very often, but when they do, they're nice.
I'm glad to hear you say that because I haven't actually found somebody else to necessarily agree with me other than, or maybe just have a bit of intrigue. So yeah, I think that rising wedges, if you break to the downside, you take this move and you measure it from where it might break, and that's your target. But if you have this rising wedge pattern, so again, this is the pressure cooker that I was talking about, where as you kind of come to a head, you are building pressure. And pressure gets, as it builds, something's got to happen. Here we've got object in motion staying in motion, but as it builds to a head, it can't keep staying in this motion forever. It's got to eventually pop one way or the other. So if it breaks to the downside, it's something that's just very minimal interest to me, and just makes me think there's going to be some sort of range, because if you have a rising wedge that breaks to the downside, that falling move is always going to be above this low or very near it. It has to be above it if it's a rising wedge and you're measuring that move. So if you get a rising wedge that breaks the downside, I'm just going to be thinking that we have some sort of range that's going to be establishing off of this low. And yeah, okay, so that's what I would use it for. Whereas if you have this pressure cooker of an object in motion, staying in motion to the upside, and it's, cooking in this pressure, and instead of popping down into a choppy toppy scenario, it pops up. That is the situation where I look for the trend to accelerate, the velocity of the trend to accelerate.
I look at it for, like the psychology of something like that. Like if it's moving in an upward trend like that, and there's an upward trend line, and it breaks out of something like that, it has to be explosive to even get enough momentum to break an upward trend line like that, because it's already moving up. So you're like moving up, like really strong up. That's why I like those types of patterns, and that's what you're explaining. I think that's why I said they don't happen very often, but when they do, they're awesome, because like you said, it's a pressure cooker and it explodes. And to me, that it takes a major psychology of something, or something's going on for it to break like that kind of thing. So I'm sorry, I didn't mean to interrupt. Keep going.
No, I'm glad that you did, because what you said is the reason why I believe what I'm saying, in terms of it just makes perfect sense for a bull trend that comes to a head, and then instead of it falling down, it pops up. Well, it just makes perfect sense that there's just an imbalance of supply and demand.
Have you ever found are those times that happen in between hyperwaves? Is that like a hyperwave breakout, or do you usually see wedges breaking out like that? Could be a 3 to a 4 or something like that? or am I just thinking weird?
Yeah, it's a beautiful question, and a perfect segue is what I was very excited or just interested to talk about next in terms of when this sort of thing happens. That is the thing that tells me that potentially a new phase could be establishing within a hyperwave. So right here, if we just kind of extend our phase, what was just a wedge line here, just gonna kind of extend it down so that it's not just from here to here, but down here, and then do another one like something similar like that. And this is where the hyperwave fractal is coming from that I think I mentioned at the top of the show, where you have the sideways consolidation. And then once you break through that, you establish the phase 2 right here. And then as you establish this phase 2, what happens is, I mean, you could, I wasn't viewing this as a wedge myself in real time because it was more parallel like that. But again, what happens is that you have this bull trend line and this top trend line of resistance that instead of, as it's kind of starting to work its way towards some sort of head, instead of it just what I've grown used to seeing myself in these rising wedges is that break to the downside is they just keep working up and up and up as the shorters are here, stopped out, and then getting overconfident and getting over it, and then stopped out, and then the real rising wedges just really like to rise and stick in there and then dump.
Do you typically find the wedge breakouts to be 3/4 of the way to the apex?
That's something that I pay attention to with some descending and ascending triangles, but not as, I guess I pay attention to it with the wedges in terms of if it keeps working too close to this apex, then it really makes me think that these shorts are just getting squeezed and squeezed and squeezed before it's going to get dumped. So if it's too close, maybe makes me think that it is more likely to break down. Whereas here, if we just kind of look at, where would the 60% of this kind of be? Say it came to a head here, 160 bars. Here it breaks out 90 bars. So here it kind of did break to the upside around that period. So potentially the sooner that it breaks, the more likely that it is to not just keep driving out these shorts and instead do the opposite and just hammer anybody who's left behind and anybody in the shorts down in here. So yeah, a good question. I think it's important to pay attention to the break in relation to the apex. Again, here we may have this one.
I know this is going to sound weird, but I actually use the fib level, basically the 61.8%, which is basically 62% of the way. It's not quite 3/4 of the way, but a lot of times if I'm looking at wedges, I'll kind of red flag that time period to possibly break out. So it's just it's not that it happens all the time, but that's just kind of a red flag that I look at. If we're in a wedge up to a certain point and it's getting to that 62% level, I would look for a breakout to the upside at that point, or at least from that point to the 3/4 point, somewhere in that zone. And if it doesn't, like you said, it'll just kind of keep going and peter out at the end.
Very interesting, and another good thing for me to think about in terms of.
No, but I like the way you did it too there. So it just kind of similar to the way I looked at it also. So that's why I wanted to bring it up.
And I appreciate it. And so yeah, if we just kind of look at this one here, as we're looking at it in hindsight, it's real easy to look at. But say it's in real time, and the price is here, and you're at 58 bars. And you've got these trend lines here. They come to an apex around 100 bars. this could get very liminal. This is down here dumping towards support, and you're expecting that it could break down around 61 bars. And then here you are. This is, I think, a very key aspect that gets looked over is, just combining that timing with the price, thinking along those lines. And then if you're able to think along those lines and say, okay, if this breaks down in the next 3 bars, I definitely want out. And therefore, if normally your stop's below this low, and now you can say, well, this thing has to pop right here in the next couple bars. And if it doesn't, then I need out. So therefore, I can maybe adjust my stop up or add leverage, or just increase the exposure size, whatever the case may be.
So how many bars was it until it broke to the upside?
That was 69. We'll say 68.1. How's that?
Okay, I was just curious.
All right. So yeah, I think that these patterns are something that will be very helpful when markets are moving. And the most important pattern to me is the hyperwave pattern that we see establishing, which the next phase tends to happen when you break through the top of the prior phase, and specifically when you turn it into support, because we've seen many, many times where it looks like it's breaking through and then it dumps. So what I wait for is, to see it turn into support. So here we have the horizontal resistance where you pop through, and if it's going to dump, I'd expect it to be here. When you hang, now it's like, okay, we're turning it into support. Now we start to accelerate at this angle, and then here we have this resistance. You break through, and then you turn it into support right here, with not having one close below as you broke through resistance and turn it into support. And this is, again, something we've been talking about for parabolic runs. What I believe gives them fuel is failing to return to prior lows. And it doesn't take much at all. This is all that I think it takes. Right here, the biggest volume spikes happen at these exact lows. Like, think about what happens for a low to occur, an object in motion, staying in motion. The reason why a low would occur is because a huge volume spike happens and it doesn't cause the price to go anywhere. Or the other thing is you get here and then there's just no volume. There's just absolutely nobody interested in selling. That's the other thing that could happen for sure. But when you fail to return to this high, it means that there were a number of people expecting a big volume spike right here to either, fill, get them out of shorts or get them into longs, whatever the case may be. And when this happens, that's the fuel, at least in my mind. That's the fuel that causes us to go at a higher rate as you start to have them chase their shorts that are underwater that they were hoping to get out of at break even or somewhere around there. And maybe they got out of a little, but not all of it. And then the other guys who are hoping to buy as prior resistance is broken through, they want to buy it as it becomes support. And if it doesn't come, now we've got the kind of fuel, the space for a new trend line, a new phase line to kind of take us at an accelerated rate. So here we see that we've got this trend line here. That was resistance. It hasn't turned into support yet necessarily. Like here, of course, we had the beautiful throwback, but what I'm seeing is even better in terms of what we were just talking about. This hasn't even gotten the chance to throw back to test it. There's one thing to turn, you have resistance and then you turn into support. When you have resistance and then you find support above prior resistance, that's where there's that gap of big volume, even when there just may be a little bit of room that may not seem like a very big deal. So this is a very big deal to me. Not only have we not thrown back to this trend line, again, we have failed to throw back to this horizontal. So this is very much different from a top to me, that or a chop, like in terms of if we're going to accelerate, then we need to do everything that I'm seeing.
Could you put that that line back? Question for you on that wedge right there, the two red lines, where those two lines intersect, do you consider that intersect up there at the apex support?
Big time, and almost even a magnet.
Okay, because that's what that I personally look at that also. That's why I was wondering if you did too, and I was wondering what that price was, because I can't see what price that intersection is.
I'm glad you brought that up because I wouldn't have touched on it myself. That price is 17,100.
Okay.
And what's so interesting to me about that is a couple things. Where this is the perfect trap zone as far as I'm concerned. Let's see how
the 17,100 is the 144 EMA on the hourly. That's the level that I've been really watching.
Very interesting. Very interesting. Yeah, so here's something that I would be watching for a textbook trap. It would be anything that occurs between 17.1 and 17.2. And here's why I think it would be perfect is because the first thing that it would do, if price fell here, it would take out anybody who's using this low for a stop. And I think that this is a very valid place to set a stop. And as a matter of fact, I have stops set there for multiple reasons. I'll not try to get into, but the main thing that I'm looking at is these higher lows. As you have these dumps happening, this huge candle here down to here, and then this big sell-off from here down to here, notice higher low, critical. This is very important. If this is a lower low, that's a night and day difference. And then again, a big candle that fell all the way down here, higher low, and then what happened this time, it closed green. And it wasn't even like a close green. It was a strong green close. So that is where I would definitely be looking for that to be a level that should hold, because it ran down to run this stop here or this stop here. Anybody using these lows here, they got stopped out right here. So then when you get stopped out and then it quickly rebounds and closes a strong green, that's where I would want to see this close hold. Otherwise, it tells me that these guys that cause this candle to turn green are going to be the ones that are underwater, which kind of touches back on what we were talking on earlier. The ones that are underwater are the ones can start panicking or whatever the case may be. As long as the high volume candles, as long as the higher, the stronger hands, as long as the ones that are buying the most, as long as their levels are holding, then everything is looking really good to me. So here we have this high volume bar that would cause me to draw this horizontal, and I would consider this to be a really interesting buying opportunity, and B, this to be the stop. So as I'm talking about this being a run on stops, I'm also sharing about why I would be stopped out myself. And then the other thing that I would be looking at is the prior high volume candle. So here we have this high volume candle, which is, again, this big doji thing that happened here. That's where I would be most interested in this low. If this low can't hold, that tells me that whoever bought this bought the top. Whereas if this low holds, it tells me that, price is going up and volume is going up. And that is textbook, like that's what you want to see. If price goes up and there's no volume, it tells you there's no demand. And that was actually something I wanted to touch on with Joe that I didn't get the chance to, in terms of, he mentioned something along the lines of just the carpet being rolled out and a lot of sellers pulling their orders. And I really disagree with that. I haven't been watching the order book like Joe, so he's the authority, and that's why I wish I could have talked to him about it, and maybe we'll get the chance to next week. But to me, this isn't the carpet getting rolled out. To me, this is liquidity getting eaten up. And if you have a lot of people that have just been waiting for years to sell these prices, literally waiting for years. How long have you been thinking about selling Bitcoin at $17,000? Years. You've got all these people waiting years to do it. And then as soon as they get the chance, it's the worst time to do it. That's kind of how I would expect it to happen, where, you know, you wait for years to sell these prices, and then as soon as you do, all of a sudden you wake up tomorrow and the price is at 30K or whatever. It's like, holy shit. It's like that's kind of the situation that I would expect to happen. This is what this is telling me, is that there were a lot of orders there. There was no laying out of any red carpet. There was congestion. There was pressure. There was pressure cooking at these critical levels. And boom, you break out with big volume. And then what happens during the consolidation or the pullback, the volume decreases. So what I'm seeing is that there is no carpet being laid out at all. There's a lot of people that have been waiting for years to sell these prices, and they just got eaten alive. And I'm wrong if this doesn't hold. If this doesn't hold, then I'm wrong. You know, then these guys just made a great sell, and they killed it. So the interesting thing about what Fibbo was kind of talking about with these lines intersecting is that a quick wick down here would be perfect in terms of, you could take out all these stops on this candle, on this candle, on this candle. If you wick down to here, you just wipe out all that, you get this big volume spike that occurs, but that doesn't return to this high. So notice how the longer we hang out up here, the more these trend lines accelerate. And at this point, where how far they have accelerated, we have room to have a quick move down to get a huge volume spike. If we move here to 1715, there would be a volume spike. And if bulls support it, and they support it above here, now you got a lot of people panicking and starting to, you know, that starts happening. Whereas if they don't support it, now that becomes your resistance. So when we've got this intersecting here, these trend lines here, and then we've got this kind of horizontal setup where you could take out this low, but also keep this intact, and then throw back to test this prior resistance for support. That's the recipe, you know, for a shakeout. Whereas when that shakeout gets too obvious, like this is too obvious in my mind, I don't think this is going to happen. I just don't. I think this is too obvious, and that anybody waiting to buy this, anytime there's a shakeout, there's got to be a lot of people waiting to buy it. You know, otherwise it's not a shakeout, it's top. It's a top. So if there's a lot of people waiting to buy here because they got left out, and they keep getting left out, and they're, you know, now they're not even waiting for here, they're going to go ahead and go here, that's when you get the acceleration. So that is this pressure cooker that I've been talking about, in terms of, it was here where you come to the top, and, you know, you see how volume here was, you know, you had the volume spike here, low, big selling spike here, and those guys got eaten alive. They never got the chance to buy back at the same price. Boom, selling volume spike, panic sellers never got the chance to buy back at this price. Then you kind of have this little lull, and then now we get this spike in volume. They shouldn't get the chance to buy back here, if I'm right. So what I think is that this is another gap in volume that could be a big, not a big, just a gas station. We talked about Bitcoin thumbing down the road looking for a gas station months ago, and this is the gas station that could cause it to enter a pressure cooker, but not, you know, reverse, in terms of, again, now we've got this volume spiking. We've got price going sideways, but to me, this isn't a top. We've got a strong trend, and tops don't occur with the, you know, Fibonacci levels intact. There's a lot going on here now, so let me just go ahead and wipe this out. Let's just kind of take a quick look at this action here, where you have the breakout. Let's say if it was me, I'd draw it either, here or on this low, like let's say here. So you got the breakout, the move through, and you need, you don't go straight up or straight down. So you need a correction. And if the correction just goes straight sideways, it tells me it's like kind of a fair fight. There's not over leveraged buyers right now. There's an equal fight during a bull trend. This is what I'm seeing. And not only that, an equal fight during a bull trend after the break through the top level here. So let's just compare that to one of the last major runs that we had. To me, this was a big top, and I posted it very publicly and was, selling this. And, let's just look at the difference. You have, the wedge again that breaks to the upside. So let's draw our fib in, and you instantly retrace that whole move very, very quickly. And not only that, you then turn 0.618 into resistance. Then you maybe get a little head fake above that turns a 0.382 into resistance while maybe wiping out some of these. So that to me, that's a top where you're not supporting. Like to me, it's just much different than supporting here when you break down and then resist and maybe do some weird stuff. What we're looking at right now is definitely a congestion point for sure. And anything could add, like I could change my analysis very quickly if we fail to hold these levels right here. But as long as we're holding above these highs, and then we're also holding in what would be the fib buy zone based on how I use them, this 0.32 to 618. As long as we're holding here and, maybe wicking below, to me, this is all very strong. Wicks below, popping back up. People are selling that are in a lot of profit. Like, you can't really be underwater selling here. Like if you're underwater selling here, I don't know what to tell you. That's hard to do. So therefore, what's going to happen in my mind is that the market's going to punish people that sell too soon during the strong trends. That's what Bitcoin has shown a very big propensity to do, is when it makes these big moves, not everybody just rides from the bottom to the top, as much as people like to pretend they do, or even we like to remember how we rode every bottom or top. The reality is that when the biggest moves happen, it's just too easy to sell too soon. And this is a spot that is the definition of being too easy to sell too soon, where we're supporting clear here, we're supporting clear here. And the last thing I will just kind of show is that I think, as I've been going through, like a hyperwave fractal and all the reasons why I would look for a new phase line, yada, yada, yada. To me, this is the perfect time to establish the fourth phase of the hyperwave fractal to get that euphoric blow off top at the all-time high. It's adding up to me, and I might be wrong, but this is just in my opinion, man. So we have the phase 1, phase 2, phase 3, potential phase 4. What we look for is an equal return in half of the time. So here we have a 23% return in, that's the wrong one, 1 second, 23% return, and we'll say 17 days, okay. And then here we get another, we'll call it 20% return, and at about half of the time, and more like a fib number there, 81 bars versus 106. And now, would just be interested to see continuing and in a shorter amount of time, because due to the velocity. And if that happens, we're right up around here with the euphoria that occurs at a market that moves at this angle. This is what creates the euphoria, as far as I'm concerned. It's not how much it returns, it's the time in which it does so. So if it returns, a lot in a little amount of time, that's where the euphoria just overwhelms, and shooting through some sort of testing and or shooting through the prior high and getting some sort of, nope, that's too much, move back down to the 14K area. This is what I'm trading for. This is what makes the sense to me. And I'm loving what I'm seeing in terms of, if too many people were just fully in agreement that, yeah, let's buy this. If too many people are saying that, that's when I really, think that there's not a pressure cooker unless I'm on the wrong side of it. Whereas when I'm looking at these just beautiful patterns painting and these beautiful and these critical levels holding, and a lot of people, feeling like there's good reason for a top, it just really makes me, kind of go in a big way. So that's where I will be looking for this to be a bull pennant, and it's unconfirmed, but if it does confirm, the move up into here would just really line up very nicely with the Hyperwave fractal. And again, anybody that is, not too familiar with the Hyperwave stuff, I think that it's something that is very, very, very useful. I've been using it throughout this on altcoins. In crypto, when markets move, they like to move in accelerated angles like this. And even if you, think that Hyperwave is bullshit because Bitcoin never went to 1,000 or something along those lines, the concept of the accelerated angles and the idea of this pattern is something that I would definitely encourage people to look into, because it's something I've gotten a lot out of myself. And that being said, I am quite glad to call it a day. It's been longer than I expected, but I think today was an important day for the price of Bitcoin. This is the pressure cooker. And if I'm right, this will be where it blasts off, and we look back in a couple of days and think about the podcast we had right before the all-time high. If I'm wrong, it dumps down, and I'm going to be buying it hand over fist. If it falls down to the 16 to 14K area, that is my buy zone. So. That being said, I am very much.
A lot of good stuff. Got to put the jams on, man. Put the jams on.
No doubt about it. So I'm no matter what happens, as long as we get to party, that's really all that matters to me. And the sooner that we get to do it, the happier that I'm going to be. So with that being said, I think I'm going to go ahead and sign us off with
technical difficulty.
Oh, good. I thought it would just be there for a second.
That was a technical difficulty. All fixed.
Well, if you have any last words to say, go ahead and chime in. Otherwise, I'm going to just turn on an awesome tune, and we're going to sign it off that way.
No, the only thing I have as a sign off is I like the 2 green candles we're seeing so far off the bounce. So hopefully it keeps going. We're at 1836, 1840 and climbing. So hopefully that keeps going. So that's what I'm going to sign off as. Just hopefully these green candles get a little bit of momentum behind them.
I think the momentum is there, and it is only going to increase from here. So that being said, go ahead and jam a little tune for us to give you guys a little taste of the licks that we're going to be handing out to anybody that shows up to the all-time high party.
I lost the audio. I can't hear it. There we go.
Distance, I'm getting used to it now. Lived in a brownstone, lived in a ghetto. I've been all over. us. Jesus, don't even know my real name. Everything's ready to roll out. Sleep in the daytime, work in the night. I know fire. This ain't no disco. This ain't no fooling around. I ain't got time for that now.
Oh shit, that's awesome.
This ain't no disco. This ain't no fooling around. I ain't got time for that now. What about Houston? What about Pittsburgh? You ought to know not to stand by the window. Somebody see you up there. With some peanut butter to last a couple of days. But I ain't got no speakers, ain't got no headphones, ain't got no records to play. That's cool. What I'm gonna take this time. I got another ice cream, it's a little pulse. I ain't got nothing at all. This ain't no party, this ain't no disco, this ain't no fooling around. I'm gonna hold you, I'm gonna kiss you, I ain't got time for that now. Cut through the roadblock, we've been knitting with the crowd. We got computers, we're tapping phone lines, know that ain't allowed. Students, we're just like housewives, oh, in a suit and tie. Changed my hairstyle so many times now, I don't know what I look like. You make me shiver, get so tender, we ain't got pretty good tears. So exhausted, you wanna get you some sleep.
Thank you all for tuning in. And anybody that wants more of that action, we will catch you at the all-time high party. And that's a wrap.
Peace out.